Hey yo, what is up? My name is Ishan. You're probably busy, which is perfect because on this channel we like to keep things short and sweet. No fluff, just quick and to the point. So in the next few minutes we're going to be going over the nitty-gritty details of Airbnb's planned IPO and my personal strategy of what I would be doing. So make sure you've subscribed because we just hit 1,000 subscribers yesterday on my birthday, which is absolutely insane, and you best believe we're going to have a special video for that. So make sure you subscribe because unlike any other YouTuber, we don't waste 10 to 20 minutes of time. So subscribe and let's clock in. So Airbnb submitted a draft registration to the Securities and Exchange Commission for an initial public offering. No financial info or indication to how many shares they plan to offer was given. And so now that it's actually about to happen, many of you guys are wondering whether you should buy or stay on the sidelines. So let's take a look as always at the facts and the numbers. In May, Airbnb laid off 1,900 employees, or about 25% of the company. They also slashed marketing costs and raised $1 billion in debt, with the loan's interest rate being priced at a massive 7.5%. So you can probably understand how much struggle they must have been going through that they actually accepted to pay 7.5 interest on that loan. Just looking at this chart, we can see the huge disconnect between people passing through TSA checkpoints this year versus last year. In fact, the US Travel Association in a report on August 13th estimated that over $330 billion has been lost for the travel industry. Qantas Airlines CEO said they are unlikely to even resume international flights before July 2021, and that international travel won't recover until 2021 as well. And so all of this has resulted in Airbnb's valuation falling from a peak of $31 billion down to all the way to $18 billion as of their last round of funding. And according to Bloomberg, quarterly revenue plunged to $335 million, down from more than $1 billion in the same period last year. As we've seen with similar companies like TripAdvisor, whose revenue is down 80% year over year, similar things are going on with Airbnb as well. And the fact that unemployment's very high, travel restrictions stay in place, the pandemic is still happening, I don't see Airbnb's business recovering fully until 2021 and 2022. But despite all this negative news, there is still hope and a bullish way to look at this and why I would actually be potentially looking to buy. Firstly, Airbnb was growing at over 40% year over year before the pandemic, and over 2 million people were staying in a rental every night. The fact that they chose this very time to IPO is super smart on their part, because TSA checkpoints at US airports rose for a second consecutive week with 831,000 people on Sunday alone a couple weeks ago, its highest level since March 17th. So Airbnb is IPOing at a time when things are significantly rebounding and it's coming significantly below its peak valuation. Right now, with the current state of the market, it's obvious that the whole pandemic situation has been priced in, as we've seen with retail stocks, airline stocks, have all been consolidating, waiting for that big news, which is a vaccine, to send them soaring. But even if we don't get that news, with the way the market is currently behaving, there's only growth ahead for these companies. Right now, everything has plateaued and now is back to the growth stage. And so I believe it is a possibility to buy some Airbnb very cheap than what it could be worth in the future. So my plan to buy the stock will depend on two things. First of all, it's financial info. We don't know any official numbers yet. We got the numbers from Bloomberg, which is from credible sources within Airbnb, but no numbers have been official yet. We don't really know their current state of how they're doing. But based on what Bloomberg is saying, they should be doing between $200 to $400 million per quarter for the next few quarters. The second thing that has to happen to convince me to buy is its market cap falling to $12 to $15 billion. I definitely won't be buying when it straight up IPOs, because I believe this is a stock that could rally initially, but investors will panic and end up dumping the stock. Sure, right from the get-go, maybe that doesn't even happen, but I really wouldn't want to be putting money in a company worth $20+ billion whose sales are down 80% right now. And so based on what Bloomberg was reporting, a $12 to $15 billion market cap would be roughly 6 to 7 price to sales. And that's still really high, but considering their pre-pandemic sales, I really believe it's a fair valuation. At that market cap only would I be interested in buying. I really wouldn't want to be putting money in a company worth $20+ billion whose sales are down 80% right now. It's definitely going to be a risky play, so comment down below what you guys think and make sure you subscribe. We're only going up from here, 10,000 subscribers, 1 million, who knows? So make sure you subscribe, like, let me know down below, do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.